Hello, hello. Listen, we are here ready to go. And if you are last week we were talking about business owners, but if you are a person who has paid taxes, needs to pay taxes, needs to figure out what do I do in getting my taxes together, we have with us the special guest again, none other than Ms. Hope Brown, the tax-minded professional, a bookkeeper, I would say. And we'll be right back once we have a little commercial and a greeting, and we'll hear from her and get right into it. Well, hello, hello, hello. Once again, we are back with Money Talks with Ayanna Smith, and I am your host, your financial professional and insurance broker. And I'm here to really help connect personal to business and business to personal and make everything make sense by getting yourself properly protected and covered. So if you live too long, die too soon, get too sick, all of that is taken care of. But tonight, as we're wrapping up Life Insurance Awareness Month, we can't go without still eliding it into taxes. And we can't get rid of that because I say we are all cousins because of who? Uncle Sam. So without further ado, I want to bring up this great messenger about this taxes. She can help us. She can help us. So make sure you reach out to her. And so we have none other than Miss Hope Brown, and we're bringing her from the green room, the virtual green room. And here she is. Hello.
Hey, how are you guys doing? Thanks for having me back.
Absolutely. So excited. So
Yes.
last week we were just talking about the business side of how taxes look and the bookkeeping aspect. And you gave some very powerful information that I do hope people will take advantage of because we have a lot of dualpreneurs here or people that really, they're still functioning in the W-2 world. They're starting their businesses or they've had businesses for a while. And then we have people that are full entrepreneurs. So we have a gamut, but it still comes a time where you have to go back on that first love or the first thing, personal taxes. So that's what we
Yeah.
want to jump into, tonight with you. So yeah, just share a little bit about yourself really quickly and then get into our topic for the evening.
Yeah, sure. So, as she introduced me, so I'm Hope Brown of the Tax Minded Bookkeeper. So, guys, I am a licensed tax preparer, but I'm also a certified bookkeeper. So, I'm kind of helping business owners be able to track their income during the year, just so that they don't have any issues during the end of the year when tax season comes. And I'm also providing tax planning services for individual taxpayers and also business taxpayers. So the main thing is to keep you guys compliant, just keep everything in order and just help you really maximize deductions for tax savings. So I was telling Ayanna earlier, I'm going to try to break down. I mean, taxes can be heavy duty, but I'm going to try to break down the points I want to make tonight, kind of like in three sections. So we're going to start off talking about just basic tax strategies. And I just want to cover the basics because a lot of people, all they know is, by April 15th, they got to file their taxes. It's normally a very stressful process for people. They just want to get it over with. It's kind of like going to the doctor to get like a shot or something. You just want to get it over with. But when being smart about it and actually planning in advance, it can be a lot less painless. And I want to explain a little bit why. So with basic tax strategy, there really are like three ways that you can go about tax planning. And you definitely want to do tax planning, guys. It normally involves like reducing your income, okay? Because less income is going to be less taxes. Increasing the number of tax deductions throughout the year, because again, that's going to affect your bottom line. And then also taking advantage of certain tax credits. So you definitely during the year, you don't want to wait until April 15th. And again, I'm just kind of talking about the basics. I see a lot of people who they don't even want to think about taxes until the tax season. But that is such a huge mistake. Like it really does help to kind of have planning in place of how you're going to handle your taxes, just having a general understanding. For example, some of the tips I like to give individual tax people is before the end of the year, you want to be able just to kind of sit down and maybe pull your tax return from last year and just kind of assess the situation. You still have time. We're in September at this point, but you have time. If there were things that you didn't like about the results, you can identify those and we can seek ways to improve it now. All right. Ayana, does that make sense? Like, don't wait until the last minute.
Yes. So when you talk about don't wait to the last minute, okay. So how can, if you're leading up to the April 15th
Yep.
deadline, what kind of things can be gathered? Because I know sometimes people get their W-2s maybe in the end of January. So what things can they do going along up
Mhm.
to that point so it won't be a stressful situation? What can kind of be a step 1, 2, and 3 over the
Yeah.
months from January to April?
Yeah, so definitely you want to do things like contact. So anybody that you're expecting a tax form from in January, now is the time to reach out and make sure they have your correct contact information, address, mailing address, email address. Make sure you can get into those accounts. That's one of the top challenges I see during the tax season. A lot of people are waiting for tax forms and say if they move during the year or if something changed with their contact information, those tax forms in a lot of cases are sent out, but they're sent out to incorrect addresses. And it's a
Mhm.
real hassle to try to get that information later on resent to you to the correct address. But all of that can be avoided if now you just make a list of anybody who's going to be sending you a tax form and just make sure they have your contact information. Okay. That's
So,
like a really big tip that can help
right.
people if they would do that now.
So they
Um,
need to make sure they pay attention to all the jobs. If you transition out of a job, little or
yep.
small, any if you sold anything, even
Yep.
if you sold anything for a short period of time, get that in order. But if you worked at a different fast food or anything, little part time at the mall, whatever, make sure
Yep.
you get everything in order, and don't forget to let the people know.
Yeah.
Please forward the stuff to me. Okay.
Yeah, and not just with the work, but there are other kind of tax forms that people can get to. Like for example, they can get like forms from their financial institution. If
Mm-hmm.
they bought a house, if they sold a house, um, you know, the mortgage company will send you interest statements at the end of the year, for example. If you have kids in school, a lot of times they'll get the tuition statements, which are the tuition tax forms. You want to make sure that that information is updated because that could be a really good credit later on that we'll talk about that as a family you can claim. But just like I say, just any kind of information. I mean, and the best way to do that is with point number 2 that I'm going to talk about. And I kind of mentioned it earlier. You want to go through your last year's tax return and kind of see what's in there. That's going to give you kind of like a visual clue of any institutions that you need to reach out to make sure they have your latest and greatest contact information. The other tip that I would like people to do more of, this would definitely be good earlier in the year, but even if it's at the end of the year, you want to check your withholdings. So if you've done too little, you're going to probably end up owing. But this is a chance that if you're looking at it and you can see that they haven't been taking out enough tax, you still have time to kind of adjust that now before the end of the year. And especially as you're going into the new year to correct that situation. And even if you're getting too much, if your refund is too big, it probably means that they are taking too much tax out during the year. Some people like getting that big refund back, but that is right off the bat. I've helped some people like adjust their W-9 so they can get that money during the year because they need it. That could be like I've seen average of like $200 to $300 extra per month if you're adjusting that to get that money during the year versus waiting for the return if that's kind of like, if you'd like to do it that way.
Well, let me stop you right there because that brings that big old question up. People don't know
Hmm.
what to put on those W-9s, those forms. They do not know because they'll say put 0 or they'll say exempt. They'll
Yep.
say put a 1, put a 2. What do those
I
things mean?
know.
Can you help us understand that? Because I know there's plenty of people and everybody's listening If you know how to interpret it, you put it in the comments. But if
Yep.
not, we're going to move forward with Miss Brown letting us know. So we'll
Yeah.
make the best decision
I
on.
mean, so no doubt that could be a challenge for people. So if anybody has been at a job for a number of years, they probably don't know this, but they changed the W-9 form, or they changed the withholding form a couple of years ago. And the main reason why they did that was because people would put like that false number of dependents, like they put like 10 dependents on it or 12 or whatever. And it was really messing a lot of people up at the tax table with really not withholding enough tax. So they've redesigned that form now. And for my clients, I just basically do a session with them and help them fill it out. But if you're doing it on your own, you can go to irs.gov and they actually have a step by step process, kind of like a little program that you can use to help you fill out that form. And it will guide you through questions and that type of thing, to actually be able to help you pick the right things for, for your unique situation. But
Okay.
like I say, either you might want to talk to your tax person if you're going to them to get it done, seek out help to do it, or the IRS, like I mentioned, does have an online version which kind of walks you through that. And I've seen people use that successfully as well too.
Okay, that's awesome to know because sometimes we don't even realize that we try to stay away from the IRS so much until we don't think that the actual site has
Yeah.
something on it or things on it, lots of things on it to guide
They
us.
Yeah, and they do. So this is another thing that I would say too. A lot of people don't know that IRS.gov, I mean, as a US taxpayer, we all have our records accessible on IRS.gov. So you can actually go yourself as a taxpayer, go online and register for an account. And in that account is just like a gold mine of all of the information related to your taxes that have been filed, any notices that you've gotten. Like I'll have some clients, for example, maybe they did it themselves as far as file their tax return, but they missed a step and the e-file didn't go through and they're sitting around waiting, but they have actually been able to log into their account and see that the IRS doesn't even have their return for last year yet. Something went wrong. Or if you need to go get correspondence that they've sent you, or if you just need a tax grant transcript, you've lost your regular copy of your return, all of that information is going to be in your irs.gov account. So just so you know that.
Okay, that's great information because oftentimes, like I said, we don't even think about going to
Mhm.
irs.gov for help. And that there's actually help because we are the taxpayers and it's up there.
Exactly. Yeah, exactly. And the last like kind of basic tip that I would give is, another challenge that I see during the tax season is I see a lot of customers, they've lost forms. So they're getting the tax forms in January, but they may be misplacing it because everything's coming in at different time frames. So guys, you definitely want to just make sure, even if it's just a folder that you put aside, anything that comes in from a tax perspective, don't, get it, put it in a folder. You may want to open it, especially if you are the type of person who's going to wait until the last minute to get your taxes done. I would say definitely get those documents and put them someplace safe. But take a moment just to look at it, make sure your social security number or whatever your tax ID is on it is correct. Other information looks correct. If it's your W-2, just make sure, whatever the salary is, whatever the wages, withholding, that stuff just looks correct. Because I've seen people wait, and when I get it, I'm just opening up the envelope for them at that time, and we might see things like the social security number, especially if it's a new position. It's like one off and things like that. So, like I said, get it, organize it, but open the envelope. Don't let it sit there for 3, 4 months after January, and it would have been an error that you could have caught early and had corrected.
Hmm. So do all well, I guess if people are moving and moving around or they move houses and all that, it doesn't matter if you as long as those social security numbers
Yep.
match, anything is going, you don't have to go back and get an adjusted address. The social security numbers are going
Yeah.
to be what's needed. Okay.
Exactly. And I will add one other thing that I see. So guys, again, it's September now. A lot of things can change your tax situation that you may not be aware of. Maybe you had a child, maybe you got married, maybe you got divorced. Maybe you bought a house, maybe you sold a house. So, you definitely want to kind of take the time if you have a drastic change like that in your tax situation, but talk to somebody like early in the year. Strategies like deferring income and things like that. If someone is looking at your picture, the full picture before December 31st, there's still time to do strategies like that. Maybe having you do, you're gonna owe, so maybe having you put money in an external retirement account, better pay yourself than Uncle Sam, or increasing your charitable contributions. Maybe a lot of something else that I'm seeing stem up that a lot of people don't know that they can get credit for is a lot of people, as we're aging, we're becoming the caregivers for our parents. But
Mhm.
there are dependent care credits, for example, that you can claim for that. And being able to talk to somebody about that and understanding that how that works will benefit you from a tax strategy perspective.
Wow, that's good to know because that is becoming more, just more prevalent.
It is.
It's been becoming more prevalent because, and that ties in, when we talk about the insurance side, it ties into oftentimes, not maybe having the appropriate insurances like those living
Mhm.
benefits and things of that nature that will help to leave a person and put them in a facility. But then oftentimes the other side of it is the parents don't want to be in the facilities. They want to be at home.
Mhm.
And so if there can be a way to help the caregiver, that family member who is taking their, basically kind of putting their life in to go back and forth and help, then that's
Mhm.
that's really a good thing to be able to have a credit. So that's why it's good to have a tax professional, like Miss Brown, that can navigate you through and not just drop off things at certain other tax places where you just kind of drop
Mhm.
and go because you're getting into some details there, right?
Yes, exactly. So it doesn't have to be me, guys. I just want to see you have a good tax
Mhm.
experience. So, whether it's someone at your own CPA, like I say, I mean, don't wait until the tax season to look at this stuff for the first time. That's the
Mhm.
main point that I want to get across. Have somebody that you trust, that you can talk about your situation and really have one or two points of how this thing is going to go come after, during the tax season after January 1st for you. All
That
right.
makes sense.
All right. So I'm going to move on to like a couple of more mid-level tax strategies. So these
Okay.
aren't super advanced, but just ideas that people can think about.
Yeah,
Uh,
jog our memories, or jog what sometimes we don't realize, or so what the levels. Just jog our memories and help us to basically, you're empowering us
yeah,
to be
I'm
able
just
to
sharing
ask the
information.
appropriate information. Okay.
Yeah. So guys, my goal tonight is just to share information. Maybe, I mean, of course, tax strategy, tax planning is exhaustive. There are so many different avenues you can go with it, depending on your unique situation. But I'm just kind of throwing out some things to kind of get the juices flowing that may or may not apply to you. But definitely, you want to seek your own unique, tax preparer or CPA for your unique situation. But let's talk to about one that I see a lot. Sometimes people are actually making money, and a lot of times at the end of the year, they're going to get a year-end bonus and that type of thing. But it may benefit for you instead of getting that bonus before December 31st, depending on where your tax bracket is, and if you're already going to be owing, maybe to push that out to after January 1st.
Hmm.
So that is definitely an example of tax planning, and you can negotiate that with your employer. I've had a lot of clients actually do that just because the numbers would have been a higher tax bill for them,
Mhm.
um, getting that year-end bonus than waiting until January. So that's one thing. You also want to start looking at taking advantage of your employer programs like the Flex Plan, or medical reimbursement accounts offered by employers, because they can help lower your salary to your taxable salary, so that you can use that to pay medical bills, but it's allowing you to contribute a certain amount in and avoid paying any kind of income or social security tax on that amount. And I've seen people saved about, like between 20 to 35% with that kind of strategy, spending after tax money.
Yeah, that's a good strategy. Taking advantage of that, and yeah, and it's not just the medical bills. It usually it can be some of over the counter drugs. It can be chiropractic
Prescriptions. Yep.
care. It could be different type of nebulizers or vaporizers. It could be a plethora of things. And there's actually a site. You just talked about that. The irs.gov, there's an
Mm-hmm.
actual site for people when you take out those flexible spending accounts,
Yep.
FSA. You may see that on your receipt for certain, even stuff like feminine products and all that
Mm-hmm.
stuff falls under there. So it just helps you, and your eyeglasses and
Mm-hmm.
contacts
Yep.
fall under that. So it does help to cut. And once I learned how that worked, I took advantage of it because I said it made sense to at least cut something of what they think I'm spending or think I'm
Mm-hmm.
making, because I'm going to spend it anyway. You're going to
Yeah.
spend it anyway. So why not take advantage of that type of account?
Yeah, and that does take planning, but if it can help to, so the way a lot of these accounts work, guys. So if you get that W-2, but there is going to be a box on the W-2 with your gross income, but there's going to be a box with your taxable income. When we're in contributing to these type of programs where we can use this money and it's not taxed, it's making that number in taxable income a lot lower. So as a preparer, I'm not looking at the gross, I'm looking at the taxable income. So, all these little like 2,000, 3,000s, whatever they are, they can add up. So I definitely say at least start to look at these kind of programs and understand them. Okay. The next one I want to talk about is, we were talking about like strategies for people without dependents, single. I mean, I'm in that boat too. All of my kids are older. I mean, I'm pretty much doing a single filing at this point, but
Mhm.
I'm trying to do things like maxing out my retirement account. In 2022, you can put up to 20,500 in like a 401k, a pre-tax account. And if you're 50 or older, that can be an extra $6,500. So you definitely, even if you aren't putting or able to put in that match, I mean that amount, definitely make sure that you're at least putting in the match. I mean, don't give away free money if your employer is matching a certain percentage of the funds that you're putting into the retirement account. Please promise me that. I see a lot of missed opportunities with that too at the tax desk. I've even been guilty of that in the past.
Mhm.
But you definitely have to be on that kind of thing. And again, we're talking about tax planning. All right. There are different saver credits depending on if you have already have you have a retirement plan at your employers there. But some people who don't, you can even go to an external institution and open up an IRA account and do a contribution in that.
Mhm.
And there could be saver credits and that type of thing available. All right. So I'm trying to think what else. If you're working for yourself, there's something called a self-employment pension. That is basically a version of a retirement account that someone who owns their own business can do. So you can even open an SEP if you're still like I know we got a lot of side hustlers out here.
Yeah.
And if you're making money, you can actually still contribute to your SEP account and still be under an employer's account as well too. Doing that. So kind of double, ping and pull it back and forth for retirement, both in your workplace and also in your own business.
That's awesome to know. See, I didn't realize that either. So that's really good. So you planning on both sides, and that it means there is a way to plan and put
Yeah.
stuff away for yourself. And then also, I have to insert, of course, you can build on with even more long-term strategies and build yourself up. That will
Mhm.
help save you money in the long run through the vehicle of life insurance. That is a vehicle that will build. Of course, the money's already been taxed because you're taking it out of your checking account, but the money that's built inside of it is gained as long as it's still in that life insurance contract. It's gained non-taxable, and then you can later on pull from that tax free. It's your money. So that's the way to still build. And so we're
Yep.
trying to teach strategies that's going to give people a plethora. Like I said, not all. My mom always said, don't eat all starches, not all vegetables, not all meat, but have a balanced meal. And so we're
Love it.
giving tips that's the balanced meal. So I love what you are sharing. So
Mhm.
what are the next some of the next tips that can we
Yeah.
can move
So
toward?
The last one I want to talk about with the retirement one, and it's because a lot of people don't know about it, is the Roth, the Roth account.
Mhm.
So, when we do, say if we do a contribution in a 401k plan, or even our own private IRA, those are pre-tax. That basically means that they're giving you the tax credit now. I mean, it lowers your taxable income now, but when we take those funds out, hopefully they've been investing in good products and it's grown when we eventually take that out when we get older. But with the Roth, you can put in basically after tax money. So it doesn't give you any savings now, but it will give you savings like when you take it out. You don't, it basically grows tax free. So I don't understand. I don't know if people understand the power of that, but like all of this money that we're putting in these retirement accounts now, at some point you're going to be required to take that out. Like
Yes.
there's something called RMD, or required minimum distribution, which
Please talk
normally,
about that, please.
yeah,
That is a travesty when we miss it.
it's
That's
horrible.
it's horrible. Yeah.
It's horrible. Well, a lot of people don't know that. So we work all our lives and we put this money in these, I'm in the federal government. I have my TSP. People have the 401k. People have different retirement vehicles. But at a certain point, like at this point, it's 72 in 2022.
Hmm.
Uncle Sam is going to be like, all right, listen, I've let you have all these tax advantages for a while. I want my money now. Like they're going to want their tax money.
Yeah.
So they start at like 72, and there's normally like a scale where you have to start taking a percentage of that money out. You can do what you want to do with it, but you have to basically take chunks of that money out and start to pay actual income tax on it. That
Hmm.
shocks people, especially in your retirement when people are on control income, levels and stuff. But you have to plan for that type of thing. And again, working with a good tax person as you're going into retirement to kind of do a strategy to maybe gradually get that money out. Because what I've seen is that people don't know about that RMD. And then once they turn a certain age, say 72, they're required to start taking big chunks out. Where if they knew about it, at least you're going to have to take it out. Maybe you can spread it out over years so the tax impact is not so great on you. I don't know if that makes sense, but
Yeah, it does. And let me ask you this: is there a point in time if they don't take the money out, then you lose like half your money? It's something about it was something like I don't know.
yeah.
Maybe you can clear it up.
Yes. Penalties. So the
Yeah.
IRS is like super, super, super heavy on penalties. If when your RMD date comes up, if you're not taking out the amounts that you're supposed to. So they can penalize you very, very heavily to the
Mhm.
point of where it was just cheaper to take it out.
Yes.
So you definitely want to be paying, like we have to have we like I have some older people who they just didn't know they were supposed to be taking RMDs out. So they might allow you. There are processes we can do to say, hey, IRS, this person didn't know. Okay, we messed up. They might let you slide one time. But if you're a repeat offender, they're going to start heavily penalizing you because, like I said, they've let you enjoy those tax savings for so many years. They're ready to get their cut from a tax perspective. So they're going to force you to take, chunks of it out once you reach that RMD age, for sure.
Right. And that's chunks out of the retirement from a retirement plan that people have worked their years and now they're from their pensions. Is that
Yep.
so we can be clear or have a
Anything that's
clarity?
pre-tax. Yep. Anything
Okay.
that's pre-tax. So it's the component that is pre-tax. So for example, if you have a 401k plan and that money was put in there, during your career, pre-tax, that's the account there that they will want to start getting that out. That pre-tax retirement account portion.
Mm-hmm.
So for example, so as I work for the feds and we have like, okay, our retirement system is three prongs. It's Social Security, it's my pension, which the government will just give me, but it is my 401k component. I'm talking about that 401k component, that pre-tax money that was
Mm-hmm.
giving me all those tax savings all those years.
Right.
So again, guys, just like I said, it's worth just doing a consult, especially if you're getting near retirement. I think people who are retired, you know, they get a lot of surprises their first years. It's definitely worth a consult just to talk to a professional tax preparer, CPA or accountant, whatever your choice is, if you're planning to do that type of life change, so you can see from a tax perspective how it's going to affect your situation. I highly, highly suggest that.
Right, right.
Yeah.
And I know some older people, even some of my family members, and
Mhm.
they didn't realize that, okay, when I get my retirement, it is now considered like my paycheck that I had all of the years working, and now taxes will be coming out of it. And
Mhm.
it is a very amazing, appalling, and shocking to realize that you just don't get your lump sums of money that
Yep.
you have worked for put away. You think you're going to get the whole check, but then the taxation
Mhm.
comes and you say, "Uh-oh, this is
Yeah.
a problem," and it's a shocker. And it just shows we just don't know. So this is why, we bring people that can educate and
Mhm.
share and and lift our eyes open to say, okay, now what are we going to do about it?
Yeah.
Yeah.
Yeah, I've seen it at the tax desk. It's not fun, especially so I know people who are coming out of state, state, whether it's a private organization you're retiring from, you just want to make sure that you're filling out the right paperwork so that to avoid another issue that I've seen is so I just retired. I'm enjoying my retirement income. Everything's hunky dory. But
Mhm.
then I've seen some situations where we're at the tax table for the first time after a full year of retirement. And I'm looking at these retirement forms, these retirement tax statements, and they haven't taken out taxes. So in a lot of situations, so they may have taken out the federal, but on the state level, they didn't take out taxes because the person missed filling out like one tax form. That happens when people retire from the federal government a lot. I've seen
Mhm.
that after a whole year. I mean, so again, just have somebody look at your stuff. Have
Mhm.
somebody look at your stuff.
Yeah.
Yeah.
Yes,
So
that one form is a big makes a big mess, and therefore now you're looking like you got free money, and now it's the piper is calling for the payment.
yes, ma'am. All right. Yeah,
Yeah.
you gotta yeah, you definitely wanna have somebody to help you navigate those waters. I talked about the Roth. So Roth grows tax-free. Another advantage of, investing in a Roth, guys, is that that money I mean, so the rules with that is you have to be 59 and a half to take that money out, without penalty, and it has to be in for at least 5 years, but
Mhm.
you can use that. You can take out the basis, which is the original amount you put in. It's just the growth part that is restricted.
Right.
And then also you can use those funds to purchase like your first home if you need to get money out for that, to do a loan on that to get a down payment. So it's definitely offering you flexibility with that.
Mhm.
But I always encourage people to look into that as well.
Absolutely,
Yeah.
absolutely. Things that give you the tax advantages do help you, and the things that grow without being taxed will help you as well, as long as you follow the guidelines.
Yeah.
It's a win-win, but it's worth diversifying your money with the Roth IRAs and with the life insurances,
Mhm.
the long-term strategies of life insurance and stuff like that, and it blends together to
Yeah.
give you an awesome portfolio. Because we could be
Yes.
able to
Work
do.
with your professionals.
Mhm.
Yeah, to learn about these things because she's right. You're correct on all of that. But don't miss out on opportunities, like work with people like Ayanna or myself to really help you kind of know and navigate like what's available.
Yeah,
Yeah.
absolutely.
So
Wow.
mhm.
You
I'm
you
gonna go into like a little bit more advanced concepts. So I
okay.
know like people are all over the place with different where they are in some of these strategies. So I
Mhm.
won't go too crazy with the advanced ones, but I at least want to mention some of them. Um,
Yes.
so basically, what can we do? One of the things that you can do to really shelter, because like I said, I if I'm finally single, I don't have dependents, I don't have other things. What can I do? And I always tell people one of the number one things you can do for tax advantages is start a business. um, it's gonna allow a way legally. that you can write off different parts of your life. So if, for example, if I have a business that's making, money, so you're in business, I'm not talking about a hobby, I'm talking about a business with the intent. Say I'm a public speaker and I'm going to, do some research, I'm doing some traveling or whatever. As long as I'm making sure, for example, that there's something there, say if I want to take a trip out to Georgia, as long as there's something there that I'm there for from a business part perspective. I mean, I can go on like Eventbrite and find a conference or some type of networking session or whatever. As long as I can prove that paper trail that, okay, I'm in business, I'm going on this trip, and some part of it is related to my business and building it or making money or meeting with a client, I can write a portion of that trip off. So, of course, again, you want to work with your tax person, but if you're using your vehicle for business purposes, again, there's going to be a percentage of expenses that you can write off related to that. So, your phone bill, communication, I mean, all of that, guys. So you definitely want to at least look at that business part and just forming it the right way and running it the right way. But smart people I know are able to use that to get tax savings. Major.
Yes.
So I'll talk just briefly about, even if you are, I mean, a lot of people think that you have to be more formal and register with the state and things like that. That's great if you want to set up an LLC or some other business structure. But guys, you don't have to do that. The IRS recognizes just filing a Schedule C with your normal tax return as a sole proprietor, reporting income, expenses related to that business, and then also showing your net. I mean, so again, consult your tax person for more information on that. But I just don't want you to be, deterred because you think, oh, it's going to be so difficult to set up a business and run it. I mean, you could work for Uber and file a Schedule C. So,
Absolutely.
so just putting that out there. All right.
Right.
Ayanna, do you have any questions about that, or should I dive into the next one?
No, you can dive into the next one. I mean, people are still listening and hanging on, and I
Okay.
tell you, they got the comments coming in and everything. So let's see what
All
we are
right.
talking about. Okay, Grace.
Yeah. Let me
Okay,
know if there are any
we have a
questions.
yeah, we do have a okay. We got Mia. Say, yeah, thanks, Mia. Absolutely, one of my great friends from Alabama. Yeah, and then we have a question. All right, so here's a question. I have a traditional 401k. Should I convert to a Roth?
Ugh. So if you, well, actually, you know what? We're going to talk about that. Actually, well, let me move that up. So so a lot of people are weighing in on our Roth IRA conversions right now. So again, I'm not a financial person. You definitely want to check with your financial advisor on this. But think about it this way. The market has not been particularly well. I mean, we've had a lot of low numbers.
Yeah.
So this
So
might
does
be a good time. A lot of people, I mean, are saying that more Roth IRA conversions are happening because basically they're able to convert it at this point, from a traditional to a Roth for cheaper because investments are down. So this, if you've been thinking about like converting it to a Roth, and like I say, the advantage is once it's in that Roth, it's going to grow for as long as you have it in there tax free. That's a beautiful thing. I don't know how long they're going to like allow us to do that, but
right.
a lot of people, like I said, are looking at the market. They're looking at the prices going down. They're converting portions of their traditional pre-tax retirement into a Roth, and they're just taking they're taking the tax hit now. So if you do that, you definitely want to make sure that you have the money to cover the tax on it, if that makes any sense. But
Okay.
by moving that money into that Roth, that's a long-term strategy. People are
Mhm.
just knowing that down the line they're going to get that tax-free growth. They'll take the hit now. And it's a cheaper way to move it versus when the market recovers more, it's going to be more, you're going to pay more taxes because your retirement account is going to be worth more money. So I hope that, I don't know if that answers the question
I
or
hope it
just,
did.
yeah.
Yeah, I hope it did. And I'll touch base.
Okay.
That's a good friend, family member that's asking that because people want to know what to
Yeah.
do with their money. Like I said, we weren't taught things. So now
Yeah.
it's best to listen. And then, of course, we know that the stock market has its ebbs and flows. Really, like it goes on a cycle of about every 7 years. It's
Yes.
up, it's down. So yeah, that's we have to figure out what's going to be best at the appropriate time. And sometimes it is better to leave it somewhere, but then sometimes you have to be swift and
Mhm.
move it. So.
Yes. So, kind of falling in line with that is I want to talk about something called capital losses. So, when the market's down, whether it's a house, whether it's stocks or whatever, another strategy that financial advisors will talk about is basically selling a stock or a property or whatever it is, whatever type of property at a loss. But
Mhm.
a lot of people don't understand that. But you're able to use up to $3,000 per year to offset your to offset your income with that. And then even any kind of losses that you're not able to take, you can carry them forward in future years to be able to offset your regular income.
Mhm.
So what does that look like? Think about it. I mean, like I invest in the stock market, and definitely I don't even want to look at it lately because a
Mhm.
lot of my investments have gone down.
Yes.
But if you know that, it's a good time to sell, just know that some of those losses, if you have more capital losses than gains, the IRS will allow you to use up to 3,000 of excess loss to offset your ordinary taxable income. So it's a good thing to kind of have in your back pocket if you're thinking about selling, if you're on the fence with it. Like I say, every tax year you can continue to carry those forward, but they just set the limit at 3,000 per year.
So that's giving people a
So
little bit
yeah,
to work
and
with.
you are limited. Like moving forward, it's like normally 80% of the taxable income in a year that carry forward is used. But again, talk to your tax person. Again, the planning in advance, guys, is critical because someone who is trained, they can sit down and say, okay, this is your situation.
Yeah.
This is what we can do. Time to sell, time to hold. They can really look at your situation and advise you what steps to take.
Oh, well, I tell you, this is a whole bunch. We need to have you back for a third show because, because I mean, look, the audience is still listening, but I don't want to hold them forever. But
Yeah, that's
but
it. Yeah, we
but they're
can we
still
can go with this.
listening. But we can,
A teaser.
yeah, we can go with a teaser because I really think that
Hmm.
we may look into needed to do a really closed webinar. Okay, look, this is watch this. Yes, we do. Yeah, we right.
Okay.
So cousin, you need to get together some people for me, and
Hmm.
we need to get together so we can do a group because this is really people really need to know. And if you're asking the questions, this is my cousin for real,
Okay.
that I love very dearly, and now people want to know what's going on,
Yes.
and just because we've been trapped by the lack of knowledge, basically. And so now we need to
Yeah.
get unleashed and have the knowledge to do it. And yeah, so we need to have you back probably for a
Hmm.
third session. We'll set the date again, but in the
Okay.
meantime, we will
Yes.
work to pull something together because I think it's worth that. Anybody that's listening, if you really want to
Yeah.
have a session where we can sit down and kind of go through some things, it may be
Yep.
noteworthy to do a webinar with something together. That we can work and put something in place for people
Absolutely.
so we can hear more.
Absolutely.
So we this is a lot. It is a
You can
lot.
tell I'm a tax nerd. I'm a tax nerd. I'm a numbers nerd. I'm trying to
Yes, I
save people
love it.
money. Yeah.
Absolutely. And that's the only way is to have someone that can really fine tooth comb it through to get to not miss anything, but to catch
Hmm.
everything at all possible. So yeah, we're gonna have you
Yeah.
back. Absolutely. We're gonna
Okay.
have you back.
Well,
You've given us a
and
lot
I
to chew on.
yeah, it's a lot. Well, so let me say this last thing, guys. So
Okay.
don't be intimidated by taxes. I mean, just think about it. Like you guys have professions that you're specialists in. I don't know anything about that. I mean, I would be walking in like, okay, help me, help me. But I do this regularly. Most people are dealing with their taxes one time a year, maybe a couple, like twice if they have a business. But it's not something that people readily know about tax law. So, just take your baby steps, understand the basics related to your taxes situation, and just move forward with gaining knowledge that will help you just one day at a time. Don't be overwhelmed.
Absolutely, absolutely. Well, as we close, give them information, give our audience information on how to connect with you,
Mm-hmm.
and then we'll go from there. And you all can connect with her and talk to her about a consultation. So,
Yeah, definitely. So my website is bbizsolution.com. So that's B as in Brown, B as in Brown, IZ solution.com. And you can email me at hello@bbizsolution.com. I'm also on IG as Tax Minded Bookkeeper. If anyone needs to reach out there to me, I normally try to put up tax tips and those kind of things on my social media, just to kind of, if there are hot topics in the tax world, just to kind of keep people like aware what's happening, for
yes.
sure.
Yes, check her out on IG because right, she puts great things up there, and that will give you sometimes it answers some short questions that will then maybe lead to something else. But wow, we really so grateful that you have come and given us all of this, all these juicy nuggets. All of this stuff that we can chew on and then figure out what we can do with it quickly. And
Yeah.
yeah,
Thank
so
you for having me. Yeah, definitely.
absolutely. Absolutely. So knowledge is power, and we now need to put our knowledge into effect. All
Mhm.
right. Well, thank you so much, Ms. Hope. And as we close out, we want to say make sure that you connect with me at www.askayanna.com for complimentary consultation to let you on some of the nuggets that we learned tonight, but also make sure that you are covered and protected family wise, business wise, because we want to make sure that we are really talking about our money. And as I say in most of my shows, money is always talking, even if we aren't talking about it. And so, with that being said, we are going to wish you a well night and bid you adieu. Have a great one, everybody.
All right. Good night, everyone. Mhm.